Ladies and gentlemen of the crypto space, we're going live early today. Busy, busy day, and there's a whole lot of stuff going on. So my attention is drawn in every direction possible. Folks are going to stumble into the stream. Obviously, I'm a bit early today. Friday, 11:22 a.m., June 4th. A heck of a week. Bitcoin conference. Bitcoin is riding the line. Ethereum is riding the line. I would like to say that a lot of the macro narratives are still identical. The Indian narrative is spot on. The China narrative is spot on. The Ethereum as a global monetary network is spot on. The narratives don't change, and those are the fundamentals. The fundamentals tell us where to look. The technicals tell us when. And based on the technicals, it has warranted adjustment in the way I allocate principal. And take on debt and establish working capital and generate the revenue stream, operate the business. And I've seen some data that has suggested allocating capital in different directions. Let me get some charts up. Let's go through some data and I'll reiterate what I see from the narrative's perspective. Macro crypto update. What is outperforming? That is what's most important. Capital flows from underperforming assets to outperforming assets. Monetary policy is critical. That is everything. It's all about monetary policy at the fundamental or the root fundamental level. Sure, you could have periods of time where any type of monetary policy for an asset experiences outperformance. Definitely during periods of irrational exuberance, like we had 3 weeks ago and earlier. But in times of complacency, horizontal price action, or bearishness in the market, or uncertainty in the market, that is when deflationary monetary policies really kick into hyperdrive. And there's something that I'm noticing that's very worthwhile to mention. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Got eFish in the house. We can do better. You damn right we can. 16 people in the stream, 3 likes. We can do better already. James, good morning. A pleasure. Anarcho, hit the like button. eFish, you are an anarchist. I am a contrarian. I hold no allegiance to an asset. I know that there's sharks in the water and they will take your money. And that is not something to take lightly. The whales push the market around. This is a free market where there's no rules, trivial regulation, and they will set the market up. They will make you want to go long, and they will trigger the cascade, which is exactly what happened. When you understand or at least appreciate the nature of the market participants and the power that they have throwing around immense capital, you're able to navigate it. It's like the dark forest for Ethereum, where if you have a guide, if you have a map, if you understand the nature of the territory in which you're traversing, you're able to safely traverse it. So the opportunity is paramount in the crypto space, guys. And this is so meaningful to me. There's so much opportunity cost in the legacy financial system. There's nothing that's even remotely comparable to what I experience in the crypto space. There's just capital to be made on a daily basis using methodology and strategy that doesn't exist in legacy finance. There's no such thing as passive income the way you could do it in the crypto space, considering what you could do in the legacy space. It's just nothing comparable. Very, very powerful. Andrew in the house, a pleasure. John McGuire, we can do better. Yes, sir. eFish, Noah, what would you do if Aave got hacked and you lost everything you had in there? Aave has a security module. Aave has insurance policies. I would claim my insurance policy. Zeke Girls in the house. Good morning. A pleasure. 16 people, 6 likes. We can do better. FBTC, Ethereum is outperforming Bitcoin across the board. I mean, this chart speaks for itself. Bitcoin maximalism from a technology perspective is meaningful. Bitcoin will appreciate over the coming years. That's the way it works. 200% annualized on a yearly basis for the last 10 years. Ethereum is outperforming that. Capital flows from underperforming to outperforming assets, whether maximalism gets in the way of allocating capital accordingly. That's their prerogative. What's pertinent from an opportunistic standpoint is that you want to deploy capital to the outperforming asset. Now, bear in mind, Ethereum is outperforming Bitcoin. Ethereum is riding the line. One leg down, two leg down, three leg down. Um, that's the way I look at some triangles and wedges. I look for three drives down. This is a good position, and it's really nice to see Ethereum holding. For me, from a value allocation standpoint, I'm currently not allocated to Ethereum because I don't trust the macroeconomic landscape. I don't trust volatile assets. I don't trust assets right now unless they fit a particular monetary policy criteria, which is deflationary or excess deflationary pressures. Currently, Ethereum is still inflationary. Bitcoin's disinflationary, which means it's inflationary, just the inflation decreases periodically over 4-year periods. But what has emerged since 2020 is monetary policies that are significantly different. And the reason I appreciate this is because I understand the way sovereign financial systems work, macro economies work for governments, fiat currencies, the US dollar, Chinese yuan, so on and so forth. Now, I'm not an expert in those currencies. It's very complicated. It involves geopolitics, involves understanding various cultures around the world. But what I do appreciate is the concept of the monetary policy, the inflation, the deflation, the velocity, which is the capital flow. Now, what has emerged since 2020 is monetary policies that are not just inflationary, not just disinflationary, but actually net deflationary. What has emerged is monetary policies that have incentive systems derived from uh, decaying inflation, which is disinflation, coupled with strong deflationary pressures. Now, deflation triggers supply disruption, which affects supply and demand. If there's less supply in the face of equal or increasing demand, you're going to have a supply disruption event and you're going to have appreciation. Now, this is true whether it's a bull or bear market, especially when an asset potentially generates revenue. So, you know, I've had a curve position for a long time now, since like 25 cents. I had a significant curve position. I think it's very forthcoming for myself to say I've doubled my curve positions now, about 25% of the portfolio, about 12.5% previously. There's just way too much opportunity to capitalize on transactions. Um, Owning curve is like owning a revenue share of a Forex market. And to top it all off, you're able to provide liquidity as well. So my mind has come full circle, considering the macroeconomic climate, on how to safely or defensively deploy capital to be most productive. So the capital I have is still on the balance sheet, and we don't hold allegiance to assets. Our narratives are unchanged. The narratives are the fundamentals. Everything I said about India narrative is spot on. This is going to be an absolute firestorm of development activity. Am I going to sit around waiting for the firestorm? Am I going to sit around waiting for a rational exuberance to play out so I could capitalize on asset appreciation? Oh, heck no. I have no time or interest in waiting for a depreciative cycle. It's not something I have patience for, nor do I have the stomach for it. I want to be able to sleep at night and wake up tomorrow morning knowing I made capital overnight, that the business was executing as expected. Now, it's okay for your total portfolio balance to decrease overnight, but you expect the quantity of assets you have to increase significantly. Now, that poses an interesting observation. So we've recently been deploying capital on Polygon because there's a significantly reduced cost of operating on the network. Gas prices are 22 gwei. Now, clearly, 35, 40, 50, $60 transactions are not fraction of a penny transactions. So that folds into the equation of opportunity cost. When gas prices were 100, 200 gwei, we're talking $2, $3, $4, $500 a transaction. That pushed us into a scenario where the opportunity cost was on Ethereum. because operating on a network where we did not have to incur capital destructive transaction fees was an opportunistic way to deploy capital. So we were able to capitalize while the market was paying exorbitant transaction fees. At 22 Gwei, the narrative changes because we could deploy capital on Ethereum. And yeah, sure, $30, $40, $50 transactions are significant, especially for smaller portfolios. But the opportunities are paramount and they have changed. And in uncertain macroeconomic times, this is where the portfolio principal is allocated to more defensive postures, cash, increased cash principal on the balance sheet. So cash on the balance sheet is a combination of principal and debt, but this is a period of time where I feel more comfortable deploying cash as a principal component. Now, based on this chart right here, Ethereum is quite bullish. Now, bear in mind, this is a bear flag, massive leg down. So this can break to the downside. A symmetrical triangle is break direction agnostic, tends to break in the direction of the prevailing trend. Now, the prevailing trend is significantly bearish on a moderately short time horizon. Now, clearly the long time horizon, if you zoom out, which is something that's very important to always consider, we were down at $300, $400, $500 shortly ago. So this is generally a very bullish trend. Point being, it breaks up, great. That means capital is flowing on Ethereum. That means a period of exuberance is more likely to emerge in a shorter period of time than a longer period of time. So what I'm finding comfort in right now is reaffirming value allocation strategy that I hold most dearest, which is the most reliable and sustainable, which is capitalizing on degeneracy, capitalizing on transaction fees, providing liquidity to facilitate persons wanting to acquire assets that are asymmetrically appreciating. Great. Guys, go ahead, enjoy. Not you guys, I'm saying like the market. Go ahead, enjoy. Go chase your gains. Go work for your gains. I'm going to be the bank. I will facilitate your transactions happily for those transaction fees. You guys could do whatever you want. I'm going to be sitting back with my feet up, relaxing, knowing that tomorrow I wake up with more capital, capitalized on those transactions. And that was always the core narrative. That's what we've been talking about for the last year and a half. We got sidetracked over this period of irrational exuberance with Ethereum going from $2,000 to $4,000 because we were able to outperform. Now that is appropriate. But since the pullback, since whatever, the wick off or whatever we want to call what occurred over the last 2-3 weeks, we don't have exuberance. The market isn't asymmetrically appreciating. So this was a wake-up call this morning, especially with the macroeconomic climate. Let's take a look at the dollar. Holding support on the 100 SMA. On the 4-hour, got rejected on the 200 EMA, 200 SMA breakout. And that's a heck of there's a couple of serious candles right there. That's some serious uncertainty. Now, I have no interest in traversing uncertainty and risk. I want a more predictable portfolio behavior. Look at the widening of the Bollingers, riding right down the middle. Look at that 50 SMA, 100 SMA cross. This 100 SMA holds. Where'd the chart go? Come back, chart. The 50 SMA, 100 SMA, potential EMA, SMA cross. Not pretty. That's a heck of 2 candles over a day. That's a lot of dollars moving around. Anyway, let me hit some comments and I'll get back to talking afterwards. Killis is in the house. You welcome E-Fish. John McQuire, Cream, Eth, Matic, Perp, USDC outperforming, BTC underperforming. BTC is underperforming everything. As I showed you with the Eth BTC chart, Ethereum is meaningfully outperforming. I'll show you another chart that's really caught my eye. 50-day relative strength. Now, Bitcoin looks fine. You look at the long-term moving averages, everything looks bullish over a long enough time horizon. I mean, guys, we're in the $30,000 range. We're 50% higher than last season's all-time high. Everything looks great. Now it just depends on your time horizon. There's a lot of people that'll sit back and let Bitcoin appreciate at 200% annually per year. Fine, that's a wonderful approach and strategy. You're going to have to stomach a significant amount of volatility, and I think that the 200% AP appreciation will continue. I see no reason for that story to deviate from historical trends. But I think we could do better, and I'm pretty sure I can do better because there's new behaviors and new functionality emerging since 2020 in the DeFi space. You have the deflationary protocols, you have the monetary policy with incentive systems, you have the capacity to provide liquidity to facilitate transactions, which is a recurring revenue stream. Now, if you're accumulating Bitcoin, it's not necessarily a recurring revenue stream. Sure, you could borrow debt, you could collateralize it and put that capital to work, but that's going to be a significantly decreased amount of capital because we're all working with over collateralized debt systems. So you're not able to put as much capital to work. So these are very massive considerations in weighing actions to take. But I believe I had actionable observations this morning, which is why I doubled my curve allocation. Brady's in the house, always a pleasure. Is Curve insured also? Sure, we could insure from Armor Finance or Nexus Mutual. Will you, with you not trusting digital assets, have you dumped your Matic as well? I don't have Matic nor Ethereum at this point. I have no Bitcoin as well. I have significant positions in Curve. I have all my positions in Ren, Cosmos, Bancor, Polkadot, Synthetics. I have a small position in Aave. I got a bunch of other stuff. I got some BAN, Cresco Fin. I have plenty of stuff over in the UTXO land, Syscoin, BlockNet, Firo, IrisNet, StakeNet. Four still holding on to $2,300 a Masternode. Kava got a position. Little something in Icon. So I got plenty of positions. It's not a significant portion of the portfolio. What's pertinent is the capital that's working, your working capital from your balance sheet. Now, what I want to highlight is the word dumped is misleading. There's no such thing as dumped. There's no allegiance to an asset. And Matic is separate and apart from the Indian narrative that I talk about. The Indian narrative is a fundamental narrative which tells us where to look. Technicals tell us when to look. If the technicals are bullish or bearish, that's how you make choices to reallocate capital. My eyes are on Matic. My eyes are on Phantom. My eyes are on Solana. My eyes are on Bitcoin. My eyes are on Ethereum. But what's pertinent, as I've said so many times, is capital flow. What's your revenue stream look like? If you're just holding Matic, it does nothing. There's absolutely nothing. Now, what we've been dealing with on the Discord forum for the last weeks is deploying capital on Matic, denominated in Matic, putting it into Aave, borrowing capital, either Matic and redepositing in Aave to capitalize on the incentive system, as well as the base APY yield. And that was moderately lucrative. And that was good. That's a good thing. And we could very much rationalize a moderately lucrative cash flow if Matic was outperforming, asymmetrically appreciating, a continuation, so on and so forth. But if it's not, opportunity cost emerges and reallocation of capital is warranted. So this isn't dumping in the sense of irrational behavior or any other way it could be thought of. This isn't personal, this is business. And everyone that listens to me should be operating as such, and you should not be making trades. You should not be reallocating capital based on something I say. You should all be doing your due diligence. And I wouldn't be surprised if Matic holds. And if it holds, I look like the person who made the wrong decision. There's no assuredness in what I'm doing. There's nothing that says what I'm doing is the right course of action. What I've hoped to achieve with this channel is the conversation of many courses of action, of choices that we can make that are potentially meaningful. That's why the Discord server is so powerful. There's so many folks in that Discord server that are providing meaningful insight, logic, and reason and feedback. We're helping one another to make better choices. Now, I guarantee, and I made mention on Discord that I was making portfolio changes last night. I guarantee you people have held on to a significant position in Matic, and that's A-OK. That's fine, and that's what you're supposed to do. You're supposed to find conviction, and you're supposed to justify the actions you take with your capital. It's your responsibility. You have a self-fiduciary responsibility to follow your instinct, and you're supposed to extend due diligence, and your portfolio is supposed to reflect your opinion and view of the market. There's great reason to think that many assets are going to significantly outperform. It's just the arguments I'm mentioning is I don't have the patience nor the interest to stomach the volatility. Many people have a different risk tolerance. I know my risk tolerance. Don't copy trade people. I guess that's probably the easiest thing to say. Can you show us your Aave Polygon dashboard? Yeah, it's basically zero at this point. I don't even have Aave up. There's no point in showing it. I don't have anything on Aave on Polygon right now. Iran, my man, how are you? I would like to see the dashboard to see what you are using for collateral and what the best way to do with it. I don't want to get liquidated. Yeah, when I was doing debt positions, I was at about 2.5 to 3 on the health factor, if that helps. You want to be significantly over collateralized. You don't want to take any unnecessary risk. I know other folks on Discord were down at 1.5 during the day, and they would bump it up to 2, 2.5, 3 at night. Viable and reasonable and logical. So I like that. Where's my man, Dr. T? I know you were doing something like that. I don't think he's on today. That boy's working right about now. He's risk off. He's back to the office. I myself, I'm going to get off this call and I'm going to go back to work. So that's reasonable, eFish. Watch that health factor. It's all about the health factor. I was at 2.5 to 3 at all times because I am extremely risk adverse. Iran, do you expect the next thing for DeFi to be tapping into liquidity through all different ecosystems? Yes. Cross-chain liquidity is going to be massive, and platforms like Rune are going to be very meaningful. And that I have no interest in purchasing Rune. I think the platform is extremely powerful and meaningful. And what do I want to do? I want to provide liquidity. I want to facilitate those transactions. So people, a common fallacy is tying a platform's awesomeness to the potential appreciation of an asset associated with the platform. The prime example is probably Cardano. The platform is speculatively incredible. And by the way, Charles's video last night was incredible. That was an absolutely incredible video. And I admire his intellectual capacity, his capacity to articulate. Does that mean I have any interest whatsoever in purchasing Cardano? No, I have absolutely no interest in it. What I have interest in, deploy the smart contracts, get DeFi going, and I am more than happy to provide liquidity, be it on-chain or cross-chain. That's the name of the game. Get those bridges up, my man. If there's opportunity cost on Ethereum, I'm going to migrate to another network. If Polygon catches fire, if there's some sort of new yield-bearing opportunity, I'm going to deploy capital and cross a bridge. Solana catches fire, Phantom catches fire. So what caught my eye probably this morning and yesterday, took a little bit of time to settle in, was Curve deploying curve emissions on Polygon and Phantom. So what sparked for me was it's not the platform. It's the protocols. And it all goes back to Curve, at least for me this morning. Massive arbitrage opportunity this morning. You could convert the Curve and then swap to CVX CRV and get a heck of a bonus. Swapped like 40,000 Curve for like 47,000 CVX CRV. So I basically like got 7,000 free curve this morning. That's crazy because of lost a peg in the sushi swap pool. It doesn't have a lot of liquidity. It's probably like 40, $50 million, or whatever it is. It's a tiny amount of liquidity. So it lost peg and we were able to arbitrage the crap out of it. That was a nice one, given that we're yielding like 150, 160% on CVX CRV. I have more CVX CRV than I do curve at this point. The yield is extraordinary, and CVX is showing itself to be a heck of a platform. And it is producing a hyper deflationary effect on the curve asset. Let me show you this chart. This is what caught my eye. This is Matic denominated in curve. So curve has been significantly outperforming Matic. Significantly. That's a crazy chart right here. And if this breaks down, curve is very powerful because this is a heck of a run up for Matic, but we'll see what happens. Point being, this chart is very, very interesting. Matic USDT divided by CRV USDT, if that helps. Let me get back to the comments. Have you removed capital from the crypto space? I have absolutely no interest whatsoever in removing capital from the crypto space, James. DeFi is the most incredible financial opportunity that I see. Clearly, I have some capital in legacy finance, and you guys have talked about my plays in the equity space with lithium, cobalt, nickel, and graphite, and the battery metals. So, but that's a very long-term time horizon. I don't expect that stuff to kick in until the end of the 2020s, closer to 2030s. So there's a massive amount of opportunity cost there, but it's a small amount of capital. It's probably less than 10% of the overall portfolio. But the vast majority of capital for me, this is the place to be in because dollars work in the crypto space. You could literally operate in dollars and make an incredible business out of it. Z Girl, hey Noah, what chart do you recommend for someone that's learning to read charts? Bitcoin USD. I think that is a great place to start. There's a lot of complexity and experience to understand the charts, and the charts don't tell the whole story. The charts just tell the price action and trends, and they give really these trend lines are a manifestation of gross market participants, which basically means the price moves the way the herd moves. These charts are basically showing you the herd of market participants. So they don't mean everything. What means more to me really is the monetary policy. And to understand that, realvision.com. Understand inflation, deflation, and monetary velocity. Understand what the central bankers are doing around the world. Follow Stephen Van Meter. Follow Jeff Snyder. Understand what Brent Johnson talks about. Follow Lynn Alden. Definitely watch George Gammon's videos on YouTube. And you got to have a macroeconomic perspective to really appreciate what the heck's going on in this crypto space and this DeFi space. I mean, literally, central bankers should be looking at these DeFi protocols with like, oh my God, what did they build? They can't do what some of these DeFi protocols have done. They cannot do it. These DeFi protocols are so much more powerful than any monetary policy, any central bank for any country around the world has or could dream to even have. The only way any country around the world could even remotely do what DeFi has done is China with the digital yuan. They need a CBDC. There's no way they could have uh, intentional, proactive deflationary pressures unless it's a digital currency. Incredible. James agreed. I didn't mean to use the word dump in a negative way. 100% on the same wavelength. Of the only allegiance I have is to my portfolio. That's what we should do. Protect your capital. You work too damn hard for your capital, boys and girls, and it's okay to lose capital. When I swapped out of Matic, I took a $18,000 slippage, reallocating to something that I think is going to outperform. Now, you can't overtrade because if you overtrade, slippage is going to destroy you. but it was the appropriate course of action. You had to weigh the opportunity cost. And everyone has different risk tolerances. And in the end, we have to sleep at night with the decisions we made. And there's a degree of hope that we make the right decisions, but there's always a pivot. There's always a change to be made. So, everything you said is fine. I mean, there's no malintention about making a portfolio adjustment. The extent that what I do in the stream is share with you the choices and decisions I make. James, love to see your excitement about LPing on Thorchain. Yeah, I want to LP, and I have no interest in waiting in prematurely deploying. I'm going to wait for the platform to mature. I'm not going to deploy capital on something that I don't necessarily trust. Now, Convex is very interesting. It's a relatively new protocol. They have a curve blessing. They have Yearn V1, V2 vaults to draw history on. The user interface is remarkably functional. It's flawless. It's not a 2-bit shady DeFi protocol. It is not easy to get it right out of the gate. So when a protocol comes along that has done what they've done, it's rare. It is very rare that I feel comfortable deploying capital on a new protocol. Usually I have extreme hesitation, but there's check marks that I've been able to check off with regard to the protocol that makes me feel comfortable, especially the historical precedents for what they're doing. What they're doing is very comparable to Yearn strategies, just with variation, different types of emissions, no compounding in dollar denomination. Very interesting. Andrew, it's not the fiber optic cable that makes the internet, but rather the applications on it. That's right. But bear in mind, fiber optic cable can be quite lucrative at times, especially when it's outperforming. Fundamentals tell you where you look, the technicals tell you when. So, allegiance to the portfolio, protect your capital, find your risk tolerance. No reason you can't have a Matic allocation. I don't have Bitcoin Matic. I have a half a Bitcoin stash somewhere, but there's no reason that you can't have an allocation. Depends on your risk tolerance. For myself, if I can make 150, 160% on Curve, that's crazy. That's such an immense amount of cash. The cash flow is just incredible. So everything else appears to be opportunity cost in comparison. Why didn't you swap in batches? Well, batches would have still incurred the same cumulative slippage. So the only way to have avoided the slippage is possibly waiting 7 days to withdraw Matic over Plasma. So hell no. I wanted to allocate, and so that was just a cost-benefit analysis. Was I willing to spend that capital so I could reallocate that capital in a timely fashion? And considering the arbitrage opportunity this morning, swapping Curve for CVX CRV, I made all that capital back. You know what I'm saying? So in the end, it's funny how things work out sometimes. There's negative, there's red lines on the balance sheet, there's green lines on the balance sheet. And things will work out the way they will. And over time, if we make more better decisions than less, we'll come out ahead. So it's okay. You're very welcome, Z Girl. I'm here. I wish I could help more. I wish I could do more office hours. The Discord forum is always online, and there's always people in there, and we're always helping each other make better decisions. There's no perfect decision. There's no right decisions. There's different choices and considerations. And the more people converse and communicate on the forum and on the stream, the more information we'll have, the more ideology we'll have, the more narrative and stories we'll have to make better decisions. Mark, Convex coming to Polygon anytime soon? I doubt it. It just launched. It just launched. It's not coming anytime soon. But Curve CRV emissions are probably coming to Polygon soon. So bear in mind, with a smaller portfolio, you may need to stay in Polygon, and that's okay. You can make 20-something% on Curve deploying cash. So you take your assets and you put them in Aave and you borrow cash and you deploy it on Curve. That strategy is still fully functional. There's nothing wrong with that strategy. Nothing has been invalidated with it. It's A-OK. So the reason you make a portfolio adjustment is if you see a better strategy and you see opportunity cost. But you have to factor in the fact that it's 30, 40, 50, $60 transaction fees on Ethereum L1. Now for myself, that's a palatable number. I can accommodate those numbers. I'm not willing to accommodate $2, $3, $4, $5, $600 transactions. So that's why the opportunity cost became on Ethereum when we had the market conditions as such. But in market conditions like this, I could navigate, I can move around. And opportunity cost emerged for me on Polygon. And it's not the same for everyone. That's probably the best thing I could say. You have to respect your portfolio, respect your risk tolerance, respect how much capital you have. So if you have a $1,000 portfolio, you're not going to want to run around with 30, 40, 50, $60 transactions. And I used to say, like last summer, 2020, you're priced out of the market. But that's what's so cool about Polygon. You're no longer priced out of the market. If you have $1,000 portfolio, a $5,000 portfolio, you're probably to be operating on Polygon right now. You probably have too much opportunity cost on Ethereum L1 because of the transaction fees. So for a person with that kind of portfolio, you should be on Polygon. And you should not be doing anything remotely comparable to what I'm doing. Everyone's situation and everyone's portfolio is different. I'm going to wrap up the stream, but let me hit folks' comments. Someone asked for the Discord link. It's in my profile on Twitter, but I'll pop the link in the comments nonetheless. Copy. There you go, guys. RJ, hey Noah, what is the Indian narrative that you often speak about? So Polygon was made by originally called Matic, but they was made by three Indian boys, and since then it has expanded to an organization with billions of dollars worth of capital. You're talking about India, and you have to know the culture. And I've worked with a lot of Indian boys over the years. There are countless millions, if not 100+ million kids in school, in university, or in tech support departments that see these three boys build what they built. And all I can see right now is a wave, an absolute tidal wave of inspiration flooding across the country, being able to deploy protocols on Polygon. The amount of developer activity that I expect to unfold on Polygon is best said with the word unleash. Something has been unleashed, and it's going to be extraordinary to watch play out in the short and midterm. It is a serious, serious narrative, and it is exciting. And I can't wait to provide liquidity for it. I can't wait till Solana gets a version of Aave. I have a big bag of Sol and my ledger doing nothing but just sitting there. Everything needs to be put to work. That's the biggest opportunity cost in the entire crypto space, having assets that are not put to work. So it's cool to have a bag of Solana. My eyes are on Solana. My eyes are on Phantom. My eyes are on Avalanche. My eyes are on Cardano. All I look for is opportunity, and I will migrate capital accordingly. But Matic is used worldwide. Indians barely know about crypto still. Yeah, I don't think they're missing the story that three Indian nationals built a multi-billion-dollar crypto platform. Yeah. It's not about use Polygon. I think it's more about inspiration because I know what it's like as a developer, and I know a lot of the Indian culture from friends and colleagues, and I just see a wave of inspiration flooding the country. So when you say Indian narrative, it sounds like something else. Indian narrative? Oh, that's the Indian narrative. That's the story, the narrative I have for India dealing with their interest in the crypto space, and particularly the DeFi space, and more particularly what has emerged with the Polygon network. That's my India story. That's my India narrative, my friend. Let's wrap it up. 12:02 p.m. on a Friday, June 4th. 38 people in the stream, 16 likes. We can do better. As always, I thank everyone for joining today. Please tell everyone to join me on the stream. I hope I can help as many people as possible. The Discord forum is available. It is fire. It is hot. It's a good time. It's basically friends and family at this point. I will see you tomorrow. Y'all have a good day now. Peace.